Well, good evening, everyone. Tonight is, I believe, what we would call Thursday, March 16th, 2017, and it is 9 o'clock. So that's where we are right now, the time and date. Let's move on over and see what we're up to today. By the way, introductions are in line. My name is James from the Dividend Stock Talk and Dividends for Monthly Cash Flow. We're trying to educate people on investing your money properly with dividend stocks, then investing just before the EX date, collect the dividend, get on out, and then jump on to the next company. What we're going to do now is we'll actually go through some of the trades that I made earlier during the week because they all expire tomorrow. Let's open up our window and see what we're looking at the moment. Let's go back to monitor so we see what we're doing. All right, this is our dividend investing account right here, where we're just buying the stock on a certain day, 10 days before the EX date. And what we want to do is we want to sell it for just a little bit more than we paid for it. Now what we're doing is getting our information from our software, where I'll give you a quick little example. This is today's date, the 16th of March. Okay, so 16th of March right there. Click on that. Take a quick look at what we're looking at. 42 different companies are going EX today. So anyone who owns a stock on the date of record, which is the 20th of the 17th, 20th, will be entitled to capture the dividend. So if you bought the stock today, any one of these 42 companies, and then you'll be able to catch up and capture the dividend and then sell it for a little bit more than you paid for it after you collect the dividend, of course. That's after the date of record, which would be right over here, 3/20/17. So probably the 20th, that'd be Monday. So Monday afternoon or Tuesday, just sell it, and then for more than you paid for it. All right, so what we do is we go in to the calendar, what we just looked at. We find out what stocks are paying on what day. Okay, say Monday, which was 2 days ago, we're looking at 121 different companies that paid out dividends. Okay, the dividends ranged anywhere between $2 and down. The announcement date there, the EX date is, like I said, Monday, it's 121. So you buy it, collect the dividend, get out, and then move on to the next company. So Monday you had 121 to choose from. Tuesday is only 24 companies. Wednesday, 68. Okay. Thursday, which is today, 42 companies, and then tomorrow there's only 10. Okay, so that's a lot of companies, 120, 60, 70, 250, about 300 companies altogether. This week alone, trying to figure out who is going to be the best for your investing goals. So, I tell people buy it before the EX date, capture the dividend, get on out for a little profit. Now, I'm going to add a little bit of options into that. Options basically gives you the rights to do certain things, like option to purchase. Like if you own a certain stock and you want someone to buy it from you, and they give you an option to purchase. So you can invest using that and also incorporating the options into it to get a little bit more extra money. So you can get the premium from the option and the dividend from the stock. All right. Let's see a few that actually did it today. Today's the 16th. These 42 companies. Quickly take a look at AVGO. AVGO. All right, AVGO, let's move to a regular chart. This is seasonality chart. We don't want to see that at this moment. All right, AVGO started the year out at 150. Went sideways for a couple of months. Right around June, the middle of June, and she starts moving up. So you have your nice highs and lows. You got the high there of 172. She drops down to 163, back up to 173, then drops down 167. Then up. It's just basically going sideways, but it's a nice little channel. Allow you to buy at a high and sell at a low, right in this little area. For looks like 1, 2, 3, 4, 5, almost 6 months. Okay, so at the end of the year, she's at 178. Now from 178, she's up to 222 now. And that was only 2 months to get to where she is now. All right, so if today being the 16th, we wanted to get into this stock 10 days prior to today, all right, which would be the 2nd. Okay, see that right there? We're only counting 10 trading days because there's no trading on Saturdays and Sundays. So from the 16th, which is today, 5 days ago was the 9th, 10 days ago was the 2nd. All right, now AVGO was offering $1.02. Okay, so what we're going to do, find out on March 2, right there. All right, so March 2, she opened up. Now here's the dates and the numbers you want to pay attention to. It's the date, the open, the high, and the low, and this is the close. We're only concerned right now is the open and the high and low. All right, so 10 days from today, 10 days ago, AVGO opened up at 224.11. And the high of the day was 224.98. So that's only like 87 cent hike. It's okay. So didn't make it on the first day. However, 2nd, 3rd, 4th, 5th, 6th, 7th, and it finally made it right here on the 7th day. Okay, so you're like a week and a half. So 7 days from the time you got in, this thing would have hit your target. Your $1.02. Okay, so you make your $1.02, jump on out, go on to the next company, which happens to be GOLD. Let's take a quick look at them. See what that looks like. GOLD. Okay, GOLD looks like it's kind of a sideways downward trend. Let me explain that. A year ago, she's at 90. Okay, she goes between 97 and 86 for about 3 or 4 months. Spikes up to make the high of the year at 126. And then from that high of the year, it's a steady, slow downtrend, right to the middle of December. Okay, now middle of December, she's down to 70.27. Okay, recovers a little bit, and now she's going sideways again. So she's at this moment in time 87.87, and gold was only looking for a $1 move. So let's take 10 days ago, which was the 2nd. All right. Now, the opening was 90.76. Okay, see right here, the following with the numbers and the date, high. The opening, sorry, open, high, low, close. Okay, so 10 days ago, this thing came in at opened up at 90.76. So if you put your trade in the day before, the very first thing in the morning, you're going to open up at what the opening of the day was. The opening of the day, 90.76, so our goal would be 91.76. Okay, very same day she made a high of 91.10, so it didn't make it on that one. Second day, 91.57. Okay, so you would have made your dollar move on the second day, is that right? No, wait a minute. 90.76, and a dollar is 90. Be 91. Yeah, 91.76. All right, didn't make it there. Wow, look at that one. That one didn't actually make it at all. I stand corrected. Look at that. This one actually didn't work. Okay, so like I said, it doesn't work all the time. So you would have gotten in yesterday, the opening at 90.76, and your target was 91.76, and you just barely missed it on the second day, which was the high for the last 2 weeks. Okay, so we'll have to continue watching it and seeing if we want to hold on to it to make that exit point of, what is it, 91.76, and hold on to it for a little bit longer, because you're going to be collecting the dividend on it, and wait a little bit and sell the option on it to get that little bit extra money from the premium, from someone to buy it from you at the price you bought it. So it's kind of like a wash. You buy it for 70, 76, then you sell it for 76. The only thing you get is the premium, which is just another form of cash flow. The premium of the option plus the dividend from the stock. All right, so that's 2 companies so far we looked at. WTM, take a quick look at them. WTM looks like another nice stock as far as I can see. Quickly take a look at it. She starts out the year at 790, so I'm going to stop right there, because I wouldn't do stock at 790 a share, so we don't even need to look at it. So we're going to pass on that one. WTN, DIN. Now, I only like to stick with stocks that are in my price range. Right now, my price range is $100 and below, 150 to 160 and below. I don't want to buy stocks for more than $160 a share at the moment. Okay, where are we? DIN. All right, DIN starts the year at 93.25. She goes sideways for about a month and then slowly makes a decline, and declines into a channel right around here in the 3rd week of May, goes sideways for a while, and drops and makes another sideways channel from August all the way to election day. What happens on election day, it does the same thing everyone else does on election day. Stock goes from 78, jumps up into a channel of 85. It's a nice $8 move. Goes sideways for a bit, hit a high of 87.36 before she made a steady decline the last 3 months. I mean, that looks terrible. However, the last 2 months right here brings us the last couple of weeks. Okay, did she make a big drop here on the 1st of March from 60.21, drop down into the 50s? Okay, so now she's in the 50s. Now, is she going to go sideways? Is that the bottom and ready to go back up again? I don't know. She got the dividend coming up in 10 days. Actually, 10 days ago. So today, let's look 10 days from here, which is on the 2nd, which would be right there. Okay, so as of here, she had the 10 days to the dividend. So here's the dividends paid out today. So 10 days, bring us right to here. All right, so she opened at 52.91, and we had a target of 52.91, and 97 is 52. Oh, come on, really? 52.91 and 97, 52.86, somewhere around that area. All right, something wrong. All right, so I'm gonna have to hit 51, 53. It's gonna have to hit 53.86. That's crazy. All right, so anyway, 53. The very next day, she's at she had the high of 53.55, and then you'd be out the very next day. So you only be in for 3 days. Even those 2 down days, you opened here, closed there, but did make a high. Okay, that's 1 down day. Goes over here. For some strange reason, she gaps up from the close, gaps up from from 53.51, she jumped up to 53.25. So that's a nice gap up before she came down and closed at 53. Anyway, you would have been out by day 3 anyway, because you add, where are we? DIN. Right here, you add the 97 cents right here, which is the dividend. You add it onto the opening price of this day. You come up with the target. Boom, boom, you're out 3rd day. Okay, move on to the next company. Anyway, I'm going to see what kind of questions we got, if we have any participants today. Alrighty, where are we? Here we are. No, yay! So I can get out of here then, make it a very short night. Anyway, let's go back to briefly covering where we are in the trading hierarchy. Go over some of the trades that we made. Okay, that's just showing you the strategy, how we do it, where we come up with the numbers. On Thinkorswim, first thing we do, we log into our account, we go to the marketplace, the market watch. Right over to the market watch. This pops up, and then we put in the dividends for the companies that are going to be paying their dividends 10 days from today. So today being the 16th, see it down here, today being the 16th, 10 days from today will be the 30th. The 30th, there's only 28 companies paying out their dividends. So we would take all of these companies, okay, all 28 of them, throw them into our software, which is right up here. Oh, wrong one. Anyway, we take that list from there, put it into here. Now, where did that? Oh, that's right. I couldn't get that list out of there. Okay, take that list, put it into here. Got to do it manually, unless you can find a way of downloading the numbers and the ticker symbols and all that stuff from Thinkorswim. That way, it would be a lot easier. But nope, have to insert them into the calculator. You hit go, and then it populates to find out what the numbers are. It'd be a lot easier if I had the numbers to work with. No, I don't want to see that. Let's get back to what I was just looking at. Here we go. Okay, you put stock symbols into here, put a whole bunch of them in, and you hit go, and then it populates and it tells you who's doing what. Okay, T, the very first one, F, and then there's MSFT and IBM. Okay, that's AT&T, that's Ford, it's Microsoft, and this of course is IBM. So let's take a look at the numbers and explain to you what the numbers actually mean. Okay, let's make this a little bit smaller so we can see everything. All right, we got your T up here. AT&T, these numbers represent the portion of the dividend that the stock price actually hit, how many days it took to get there. These are the averages. So if we were going to buy AT&T, we got to hold it on an average of 18 days. 18 days is almost a whole month, because you get 5 trading days in a week. 5, 10, 15, that's 3 weeks right there. 3 more, 3.5 weeks, that's almost a whole month. No thanks. We're going to pass on AT&T. Now F stands for Ford. Has an average of about 2 days, but that's only because here in 2015, the dividend didn't equal 75% or 100%, so it didn't reach the target in 2015. So that's why we only have 1.4, which was about 2 days. Okay, 2 days is not bad. We're only going to collect 20 cents. Get in, get out. Did it do it? I don't know. But that's not what we're going by. We're going by what the software says. On an average of 2 days, we're in, we're out, and we're into profit. That's great. Okay, the next one, we'll probably keep that. So I like the yield too. The yield is 4.7. That's great. right, the next one is Microsoft. Everybody knows who Microsoft is. Microsoft has an average of 5.4 days on this strategy. So you get the opening price, you add the dividend to it, and there's your exit price. That way you're in, you're out, hopefully by the same day. Now this says Microsoft usually hits that number within 5 days. So you're into it for a week, you know. So you're in, you're out, you're out. Okay. Now what we do, let's get rid of Ford because Ford doesn't have all that history there. Get rid of them. And now we're at Microsoft and IBM. Now Microsoft missed the dividend in 2010. Okay. And it took a month, a little over a month, for it to hit the target. 28 days. That's a little over a month. Let's go back to those numbers. Okay. Okay, now IBM. Look at this, all low. 1.5. So it took like a day and a half and out, hit your target. Okay. Okay, the dividend's $1.40. The stock is $175. Your dividend yield is 3.9. So if you're going to hold the stock for a long period of time, you're going to get 3.19% return on your money. So better than CD. All right. This one, got 5 days. That's like a whole week just to make 2%. So if you're going to choose, all right, between, let's go back up, Microsoft and IBM. Okay, between Microsoft and IBM, what do the numbers look like? Okay, it's going to take you a week. That's like about 6 days because the numbers look like that. To make 2%, or it's average of a day and a half. That's 2 days, and you're out. To make 3%. Okay, that's pretty self-evident, so we're not going to look at the difference between the two. But however, before we do that, before we eliminate either one, take a look at the chart. Now the chart, this is a 10-year chart over at Yahoo Finance, and it's going to show us how well this stock did. This stock did great. Look, Microsoft 10 years ago was at $30. Okay, see that? And yeah, it hit a low of 16 in 08 or 09. That's right when everything else crashed. So from that point, she's up to 64 as of today. So that's a good investment. It's a good 10-year investment. 10 years from now, I'm liking to think that's continuing to go in the direction that it's going. You know, so that one might be a keeper. All right, let's get out of there. And let's take a look at the IBM 10-year chart. That way it gives us a better idea. Is IBM a better investment or is Microsoft? You know, everything's leaning towards IBM. So let's take a look. IBM 10 years ago was at $102. Now she did hit a low in the end of 08. Or, yeah, right in 08, down to an 81. That's IBM, so it didn't go down that much. You know, it went from 127 to 85, 84. Okay, so that's not that bad. Okay, so from there, she shoots up, hits a high of 213. Now she's settled in at 177. Okay, so that's some long-term profit takers, you know, all this profit all the way up here. They get rid of it now. She's down to about here, 124. And I said, all right, IBM is a good company. Everyone's not back up there again. So is this going to be a retracement equal to that? Don't know. But here's where she is now. So, long story short, IBM on the charts and the numbers all point to the better investment. So let's get out of here. Okay, IBM is a better investment, higher yield. So get rid of that, and there you go. IBM. That's how the software allows you to get from a lot of stock symbols down to just one or two. Once you get that figured out, Then you go over to the next piece of software. Okay, you get the winning target. You put it right in here, which was IBM, correct? IBM. Plot the chart because it's out of its dividend season. Okay, let's see what we're looking at. Okay, you can change the date of what you're looking at because this is 10 years worth of data, 1 year on top of another, to decipher which movement there is on average in this 30-day period, this 90-day period, sorry. Because we do it's usually 90 days between each dividend. That's what the red dot represents, the dividend date. So from there, it's calculated to calculate 2 weeks to the left and 9 weeks to the right. Is that right? No, 90 days. I don't know how many weeks that is. Sorry. Okay, so IBM. Yeah, closing price of 175. High for the year is 182. The low for the year is 147. So the price right now is right in between the high and the low. It's offering $1.40 for the dividend, which is a 3.19% yield. Okay, so let's look at the average. If I bought it 10 days prior to today, I could look to be right about there. Going into the dividend date, looks like more like a sideways move. If you're right about here, you're basically sideways right about there. Okay, so that's no movement for the first week prior to the dividend date. After 10 days after the dividend date, well, a couple of days after. Yeah, that's 1, 2, about 2 days before she hits this up mark. All right, if on average you look like you're out within a week, okay, so that's great. That makes IBM the better choice. Okay, so I am going to bow out gracefully, and I will talk to you guys on another day. Now, we didn't get to go over our options. Well, let's quickly go over the options before I take off. Yeah, just for the fun of it, let's go take a look at those. There we go. Okay, so now as of Monday, oh, actually Tuesday, we bought our options because I like to do the 4-day spread between Tuesday and Friday because the options are going to expire tomorrow. So we'll be back on live around 3:30 tomorrow to find out where our positions are and what we're going to do about them. All right, take a look at this. First company, ATVI. ATVI. And there we go. Activision Blizzard. Am I reading that right? Activision Blizzard Incorporated. Alrighty then. That is interesting. Sounds like a video game. Alright, anyway. I do have positions in here, 928 of them. Wow, that's weird. Weird number. Okay. ATVI starts the year out at 32.65. And it's like, you can say it's almost a clean shot from 32.65 to 45.40. That's a nice upward move. And from there, it's about a month and a half, about 2 months, dropped to 36, where she went sideways for a little bit. Now, she had a nice big gap up a couple of days ago. Well, actually, that was a couple of weeks ago. Yeah, a couple of weeks ago, 39.63. She jumps on up to 45, and then slightly goes higher to where she settled at, now at 49.10. That's where she's at today. Okay, so where are we on this one? Come on. All right. We bought 928 shares at 49.16. Right now, she's at 49.10. Okay, so we're hoping for it to move. Our target is like 37 cents. We're looking at 49.53. Oh yeah, that should be easy to get. Now, that's for the stock. Now let's go for the option. The option is a 48.5 by 49. So this thing has to stay above 49 for us to make I believe it was like a 40% profit on this one. I'm not sure, anywhere between 30 and 40. Because we had a very good week this week. We got mostly 40% or better return for each position, except for one, and that was like a 20% return. But everything looked good, so that's why we got into that one. Okay, so ATVI, as long as we're above 49 by the end of the day tomorrow, then we get that nice 40% profit on that one. Okay, so she's here now, 49.11. She's got 11 cents, so she can go sideways, she can go up, she can go sideways, and she can go down just a little bit and we'll still be in the money. So we got one day, stay above 49. All right, next is DE. John Deere. John Deere, a great company, nice dividend history they got. Okay, she starts out the year 81, basically goes sideways. Ooh, what am I doing? I didn't want to do that. Oh, sorry, let's start that again. All right, John Deere starts the year out at 81.49. Goes sideways right up until mid-September. Okay, from mid-September, she starts to go up. Gets right to election time, and then nice big gap from 92 to 100. Then goes sideways for about a month, and now a nice up climb to where we are today at 110.73. Okay, what do we have for DE? Okay, we have the 108s, 109s. Oh, we're way in the money on this one. So that, as long as this does above 109, that's a nice return on that one. Okay, let's get out of there. So, good. And let's take a look at Dow. DOW, Dow, and see what you look like. Ooh, Dow looks like another blue chip stock. Okay, here we go at the beginning of the year at 50.82. Goes sideways all the way up to election time. Right in here. Okay, sideways. 50, 51, 57, right around election time. Then from the mid-November, she goes from 54 all the way up to 63, where we are today. Now, what position do we have on Dow? We actually have two different positions. Okay, we have puts, where we got a credit for selling someone, letting someone sell us the right to put us to it at anything below 63.5. Okay, so we're way in the money on that one. Now, on the flip side, we want to stay above 63.5. Kind of looks like both of us going the same way, because they basically are. Because I'm buying call options, hoping the stock's going to go up, and I'm selling puts, betting that the stock is going to go up. So anyway, I'm kind of like a greedy bite. So I got credit on one side, and I'm going to make 40% on the other side. Okay, so you figure it out. Where are my scruples? I'm looking for it to go up. All right, that was Dow. Looks like we're in the money on that one. Humana, HUM. Okay, HUM starts the year off at 182, goes sideways for almost a whole year. Oh, almost 3/4 of the year, right up to the election time. Election time, she goes from 181 to a high of 216 before settling into a sideways to end up where she is at 219. Okay, so 219.25, and where are we? We're at 215, 217. Now this thing's way in the money. That's good. So we need it to stay above 217. And she's at 219 and still going strong. It's a nice steady trend, as you can see. From here, she makes a bottom right there, around the 9th, or the 8th. And it's a nice triangle right on the upside. That's a nice position to be in. Okay, so we're in money on Humana. All right, the next one would be MDLZ. Now, MDLZ starts the year at 42, make a big sideways mess from a low of 39.32 at the beginning of the end of March last year, all the way up to, I'd say, 46. So that's a big spread. Gets a little bit tighter right towards the end of the year, and she's still going sideways to where she is today at 44.86, 88, 44.88, 44.88. Okay, what do we look in our position for MDLZ? All right, we're in the 43, 43 and a half. We're way in the money on this one, 43 and a half. That's way down here. 43 and a half is way down here. And she's in an uptrend, just one more day. I mean, don't get me wrong, it's possible. Like, look right here, you know, it started at 45 and she closed way down at 40, 43. Same thing can happen here. But at the moment, I'm in the money, nice. So keep our fingers crossed for MDLZ. Okay. NUE. Nucor starts the year out around 47, goes sideways before she hits a spike in 1st of July, spikes up to 57, drops back down in the middle at the beginning of September to 44, goes sideways again till election time. Election time, she jumps from 48 and continues to make a high of 67.81 within, that was about a month. Nice move for a month. Slow down trend to end up a sideways market to where we are today, 64.60. Okay, so NUE 64.60 where she is now. We're looking at 59.5, 60. Way in the money on that one. Okay, potash. Potash starts the year out at 18.27. It goes in a nice channel of your 18s down to your 15 and a halves, going almost 16, going sideways. You could have gotten in at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, about 12 trades within that first year if you stayed in a nice tight little channel. In, out, in, out. Oh, that would have been great. Anyway, she goes sideways. She hits a low of the year at 15.21 right in July. From there, she moves up to the high of the year, which ended up end of January at 20.09. Goes sideways for a bit, drops down to make a new channel where she is now, way down here at 17.29. So potash, where are you? 17.29. Let's see where we are. Okay, so we have to keep this thing between 16 and a half and 17. That's our little cushion right there. So as long as she's above 17, we'll be good. Okay, so where are we? 17 is way down here, and she ended the day at 17.29. Okay, as long as she's above 17, we're good. Okay, so that's everyone so far. Gotta love it. Only one we have to really keep an eye on, I believe that's ATVI. Tomorrow, everyone else, as long as they just, status quo will be good. But, hey, it's the stock market. Status quo may never really exist. Okay, we just did POT. We're doing RL now. Ralph Lauren. Okay, so Ralph Lauren starts off last year at 96. Goes sideways for a while, right into August, the first week of August, at 96. Then she jumps up to 109, drops back down, 97, and eventually gets back up to the high of the year, which is 13.79. From that 113.79, she drops in the next 2 months. Next 2 months, right into the beginning of February, where she picked up a bottom and decided to go sideways. Okay, so she's bouncing up the bottom, going sideways. RL, whoops. RL, we have 2 positions. No, that's the same. Wow, okay. The 79, 80, all right, 78 and a half, 79 spread. Looks like we have 40 of them. Okay, so as long as we're above 79, we're good to go. Wow, 79 is way down here. That's an easy one to call. It was like a waste of time. TJX, that's the one we're looking. We were on the wrong side of it. I don't know if you remember last week. On the wrong side of TJX, we sold 100 too many, or I don't know, we did something, but we're at negative 100 on the TJX. Let's not worry about that one. Okay, WDC is the last one we're going to look at tonight. WDC. Okay, WDC starts out the year right at 46.87, somewhere in that area. Just goes sideways for almost 6 months, right into September. Then from September, she shoots on up to the end of January to hit a high of 82.02, and then settles into another sideways market to end up where we are today at 77.14. Now, where are we with WDC? Okay, as long as we stay above 75, see that right here? We sold 75 calls. So as long as she's above 75, we are good to go. Okay, so everyone is in a really nice, comfortable space except for one, ATVI. I'll have to keep our eyes on that one tomorrow. All right, one more time, I'm going to check and see if there are any questions. Questions. No questions. Gotta love it. All right, so this is James from the 10-Minute Trader and Dividend Stock Talk, because that's what we're here for. We're here to encourage you, to entice you to, I don't know, make you feel like you're worthy to take care of your own money. Anyway, a lot of people feel a little self-conscious with that. Rather than do it themselves and take accountability, they would prefer to pass it off to someone else and to pay them handsomely to take care of that minor little glitch. All right, so James, I'm out of here. It's at 9:41. We will catch you